Right. I'm almost Mongolian. I'm interviewing the CEO of Globex Mining Enterprises, Jack Stoch. And at the start, maybe you could kind of go over your business model before we go into the questions.
Sure. Globex Mining Enterprises is a bit of a different company. First of all, we're an exploration company and a royalty company, which is sort of a bit different. Most other junior mining companies are exploration companies, and they have one or two properties. They raise money, they explore. If they're lucky, they raise more money. And continue along that way. If they're not lucky, then they acquire a new asset and raise more money. And all that process dilutes their shareholders. In Globex, we have a bit of a different model in that we like to make money. And because we make money, we don't have to keep going back to the market and diluting our shareholders. So the company has been around for about 40 years. We only have 56 million shares out. We've never done a rollback. Those are all original shares. I myself and my wife are the largest shareholders, so we have an invested interest in the company. The company is also different apart from the business model of actually making money, in that we try to lower the risk for our shareholders, and we also are not in love with any particular element. So while a lot of other companies are copper companies, gold companies, zinc companies, whatever, we'll take on anything that we think has exploration or production potential. So for right now, we have 252 projects, including 105 royalties. We have all precious metals, base metals, industrial minerals, specialty metals, and even aggregates, for example, for making cement and so on. We view the final product as money, not the actual metal. So that's why we don't really care where the money comes from. So we have royalties on gold, we have royalties on copper, we have royalties on aggregates, and so on. So it's a bit of a different model. We also do about $3 to $4 million of exploration a year. That is in order to maintain assets, but also to upgrade them to make them more vendable. The other thing about our model is that we are not rushed to do anything. Where other companies have to keep making news, we'll pick up a property, for example, in an element that is not in favor because the prices are good. In a bad market for metal prices, that's good for us because we can pick up the assets very cheaply. And then in a good market, whether it's the next year or 5 years down the road, then we make money by vending the project, getting cash payments, share payments, and eventually, if the deal goes through, royalty payments. So that's the basis of the business model, not diluting our shareholders, doing any type of element that has or compound that has the potential to make money, irrespective of market conditions. I can't hear you.
Oh yeah, I had on mute.
Okay, got you.
Okay, so I'm going over to the questions now. So
okay.
You've talked about the Ironwood deposit as kind of a near-term production opportunity. So what's going on with that, Robert?
Yeah, Ironwood is a small part of a much larger project. It's called the Central Cadillac Wood property, with two former producers on it on what's called the Cadillac Break, which is one of the major gold localizing structures in the Abitibi of Quebec. So we found a small deposit just off the main structure, which we called Ironwood. It's a very small thing. It's 240,000 tons, grading 17 grams, so like a half an ounce. We did a very quick study and it indicates that it can be mined with the ramp in a period of about 28 months. So we've been looking at, okay, should we mine this ourselves? And we've never done mining. We don't have experience in mining. We have a lot of experience in exploration. So the project, I mean, it'd be pretty hard to screw up because it's a high grade, quick mining. You don't have to do any long-term infrastructure. Just use trailers for the offices, for the dries and so on, because it's such a short life project. And then you just mine it, crush it, and deliver it to one of the local mills. And that's the model. So we've been looking at that. But while we've been looking at it, we've been approached by a couple companies that are interested in taking it on. So right now they're doing due diligence. And if they want to go forward, it's actually, they're looking at a larger approach, not just the wood, the Central Cadillac wood, Ironwood block of ground, but other projects that we have, which former gold producers on the Cadillac break, to make a larger project. So they're doing their due diligence. So we're waiting to see, number one, what does their due diligence say? And if it's positive, can we negotiate a deal that offloads the risk onto them, and we just sit back getting cash payments, share payments, and a royalty when it goes into production. So it's a very, very attractive project. We're expecting their due diligence to be very positive, and we'll see where we go.
What's the capex on that project? To put it into production.
I can't give you an exact number. We've done some mining analysis of what it would cost. We have quotes on the actual mining using a contract miner, because it's not worthwhile buying your own equipment for such a short life mine, because it's 28 months. So we do have numbers, but they change all the time. So I'd rather not give out a number at this point. But other to say then, it's relatively low, a simple project, and the capital cost is going to be low because we're not building a mill, we're not going to be using permanent infrastructures and so on. So it's going to should be a lot lower than other types of mining, which are long term. But if you look at the project, the profitability is exceptional. Gold is over $3,000 an ounce in Canadian funds, and let's just say we only recover 100,000 ounces in 28 months. You can do the math on that. Highly profitable. So we'll see what comes up. We've got a couple opportunities with partners. We also have the opportunity of going forward ourselves. We'll see where we go.
Yeah, I think it would introduce risk to deviate from the business model, but obviously there could be an opportunity as well. So you have I think your only royalty in production, the Fayola royalty, and from what I understand, it's a smaller deposit. So how long do you think that royalty will be making money for you?
Actually, I don't know. Right now, it's being mined open pit by IM Gold, and they have not indicated that once the open pit is mined out, that they will go underground. The deposit continues for underground mining with a ramp or a shaft, but they have not given us any indication whether or not they will go forward with that. For us, every day is more profit from that project as long as it lives. This was one of those counterintuitive things that we did a number of years ago when people were not interested in gold. The company went bankrupt, and the receiver was selling the assets, and they sold off all the assets except for 2 royalties. And 3 claims which were beside one of our properties. So we approached them to buy the 3 claims. We bought the 3 claims for $500, and then we asked them. I said, "You got anything else that you want to sell to close off your books?" And they said, well, we have these 2 royalties. Nobody wants to buy them. So I said, well, I'll tell you what, we'll buy them from you. We'll give you $2,500 each. And they said, oh, no, we can't sell it for that. So I said, well, if you want to sell it, sell it. If you don't, don't. So they called us back in a month and they said, okay. So we bought the royalty for $2,500. Now we had to wait a goodly number of years, but now the mine is in production. The last payment was what, $340,000. The last quarterly, the one before that was over $200,000. Pretty good return on a $2,500 investment. So we again, this sort of shows we go a counter the market. If we see value and other people don't see value, it doesn't matter. We go for it, and we don't have to make money tomorrow. We have a long-term vision, so we can wait 1 year, 5 years, 10 years. We have one property that we waited 25 years to sell, so we sold it for $1 million. So, different.
So open pit, there's probably not a long time, but if they go underground, there could be
yeah. Plus there are other gold zones on the property. There's other drill holes with values, and the question is, well, are they willing to put in the money to continue and finish the exploration on the other zones?
All right. You have done another kind of a new revenue. You were selling granite. So how long do you think that will go, and how much money have you made from that? So
sorry, from which one? You're breaking up a little bit.
So you are selling granite.
Oh yeah, okay.
Properties.
Yeah, Aggregate. Yeah. That's a long-term project. It's a company called Aggregate, and the property is in the town of Rouyn-Noranda. It is in northern Quebec. It is a former gold mine called Silidor, and the mine itself was mined out. We acquired it as an exploration play. And then we were approached by Aggregate and said, look, the granite that you have here is good for using in cement, good for fill. We would like to mine it. Can we do a deal? So we said, sure. So we've done a deal, and we get quarterly payments from that. And it just depends on tonnage. They have a very large client, Glencore, which have the smelter in Rouyn-Noranda. Also Falco, which is going to be putting the Horn mine back into production and are building infrastructure. So there's big demand for Aggregate. So we keep receiving checks just for barren rock, which is a great way to make money.
Yeah, you're receiving like 100,000 a year or something like this.
Actually, more than that.
Okay.
Yeah, the down payment was, I think, 150,000. And then we receive as the production goes forward. So it varies, but it's going to be well over 100,000.
Okay. Less than $500,000, right?
It depends on how much they sell. My guess on a yearly basis, it'll be less than $500,000, but probably more than 250,000, 300,000. So we'll see.
Yeah. So those two are, what I understand, yours. 2 sources of kind of recurring revenue. Is there anything else right now?
In short-term recurring revenue, we have the deal that we did with Agnico Eagle on the Francoeur project. We sold them a project for $15 million payable over 5 years. And we received $3 million about a month ago, another $3 million. And next year we receive the last payment of $3 million. So that'll be the full $15 million. Plus we have a 2% gross overriding royalty on all production from this quite large property, which has a whole series of former gold mines on it and some drilled off resources. So we'll see how that goes forward. Agnico Eagle have the property beside us called Wasamac, and they're working to put that into production. And if this property fits in completely, that they adjoin. So, and it's all the same structure. So we're hoping to generate more revenue from that. And we have option deals which are also providing revenue. For example, the deal with Emperor and so on. So we expect on a yearly basis to have, it varies, I guess, being conservative, very conservative, $4 to $5 million a year in revenue.
And your costs are like 4 million, something like this.
That's the highest. It depends on how much exploration we want to do. Some years we do 2 million, some years 2.5. On a really year where we want to do a lot of work, we'll maybe spend 4 million, 3.5, something like that. Varies greatly.
Yeah. But if you decide to just kind of just corporate cost, you're not you don't have much, right?
No. No, the overhead is relatively small. It's just the maintenance costs on properties, but we have a lot of properties.
Yeah. Okay. So from your big collection of royalties, do you have any ideas of what could be the next ones to go into production?
There's a number that are possible. We have a small royalty on a lithium open pitable deposit in Quebec. Sayona, Australian company, have a Quebec lithium mine nearby, and they acquired our project. They've drilled off a deposit. There's over 100 million tons, and they have indicated that they intend to mine that and use it as feed for the mill, in addition to the material that they have at the Quebec lithium mine. So that's one that is potentially could go into production. We also have a royalty on a gold silver project in Nevada called Bell Mountain. The company that has that are looking at doing open pit heap leach gold silver deposit. So we expect to have revenue from that. They just haven't given a date yet. And we have a number of other projects where people are pushing them forward, but I wouldn't want to say that they're going to be going to production. We'll see. It depends on financing. It depends on market conditions, depends on metal prices. If you look at, for example, a Mont Sorcier iron deposit up near Chibougamau, there's over 1.2 billion tons open pitable iron deposit, high grade. And the company that has that has done feasibility studies looking at putting that into production. So we have a lot of things where we have royalties. It depends on the work that our partners do. The downside is that we have to, rely upon the financing and the interest and the time periods that our partners take to do things. The positive side is that there's huge expenditures in these things, and we don't do that, so our shareholders do not get diluted.
The next one is the Talc property. This has been kind of my mind a bit because I read that it had a NPV counter in 2012.
So, sorry, which property? You're breaking up. I really hard to hear.
Talc. The Talc property.
Talc. Yes.
Yeah. So I read that it had an NPV counter in 2012 at 258 million, and we haven't heard about that in like there hasn't been a press release since 2014.
Yeah,
so I guess what's going on there?
We've done more work on it. We've done infill drilling to upgrade the quality of the resource. We've done more what's called QuemScan mineralogical studies and metallurgical work. We have made plastics because the talc is going to go for the plastics industry as a filler, because talc, there's various grades of talc based upon what's called the brightness or the color. So the whiter the talc, the more value it has. So for example, dark colored talc is used as a filler in rubber tires. So it's very, very cheap price because it doesn't matter. The color tires are black, so who cares? But if you're making plastics for high-end uses, for example, if you're making panels inside a car, dashboard, side panels, back panels, and you're making a particular color, let's say you're making blue, all those pieces have to be the same color. So the talc that you want to use as the filler, the whiter it is, the less variation you're going to have in the coloring, and the less expensive it is, because the dyes are the most expensive part of making the plastics. Now, all the high grade, high brightness talc for the plastics industry, the highest material, comes from China. And there's a movement to get rid of the Chinese material and have a local supply. So we've made comparative studies, made the plastics. Ours is top end, comparable to the Chinese material. So that project, that part of the project is looking good. We also have fine-tuned the magnesite. Magnesite you have, because this deposit is unlike other talc deposits. Most talc deposits in the world are just talc. This one is talc magnesite. And the magnesite, you can make magnesium metal, or you can make magnesium oxide. If you can make magnesium oxide, it's used in what's called refractory brick, for fireplaces, for furnaces. I'm sure you've seen pictures of them making copper, for example, and you see this molten copper, or you see glass making, for example, where they put the glass in the furnace and the glass is molten. Well, you ever wonder why the furnaces don't melt? Furnaces don't melt because they're lined with magnesium oxide brick, so which takes extremely high temperature. So we can make magnesium oxide for magnesium oxide brick. There's also a new use for magnesium oxide. You're familiar with what's called wallboard, the walls in your offices and your apartments. They're made out of gypsum. And gypsum is great, except that gypsum absorbs water. So if you have flooding, or if you have it in a basement, you can get black mold growing on it, which is dangerous. If you make that wallboard with magnesium oxide, magnesium oxide does not absorb water. So it's safer for black mold. It is also structurally stronger and also more fireproof. So a lot of advantages in the construction industry. The other thing is you can make the magnesium metal. It requires a lot of electricity, but fortunately we're not too far from the Quebec border, and Quebec has very good electrical prices, so we could produce the magnesite and then ship it to Quebec to make magnesium metal. So those are all things that are being looked at. The project is advancing. It's difficult. It's a very competitive market. A few companies control it, so you're going to go up against some very, very big companies, as well as China wants to continue shipping the high-grade talc to North America for the plastics industry. We've actually made a decision recently to try to find someone to take over that particular project and try to carry it forward to production. So we've actually hired a headhunting firm out of London to engage someone. So they've been looking for a couple of months now. We're reviewing some of the names, some of the skill sets. There are a lot of skilled people out there, very few with talc magnesite experience. So it's a very, very difficult thing. So we don't know if we're going to find somebody or not. If we find somebody, we're prepared to put some of the money forward to get them started and get that project up and running. But all depends on getting the right person to carry the project forward. There are no guarantees that we're going to be able to find the right people to carry that forward at this point. But we'll see. But yeah, I love that project too, because I think it's a tremendous project, environmentally great, good markets and so on. But we'll see. We'll see.
You think the government will permit it and be friendly to that project?
Yeah, there's no reason why not. There are no negatives. There's no arsenic. There's no sulfides. I mean, the tailings that you're going to have, 85% of the rock is ore. So only 15% is not ore. And most of that material is carbonate or silica. non-reactive stuff. So, well, the carbonate is reactive, but it's reactive in a good way, in that you can take that material and put it on acid tailings of other companies to try to neutralize it. So this environmentally, this project is a net positive project.
Okay. Yeah, I think this would be kind of one of the things that could be a big catalyst to take the stock to the next level. So I'm happy to hear that you're searching for somebody to take it over. I mean, to turn it into cash for you and a royalty, of course, or something like that.
Fingers crossed.
Yeah. So I looked at your portfolio of public companies, and just this is just how I thought about it. You had like Pan American Silver in there. You had Agnico Eagle. The stocks have done well, and I think those are like expensive stocks. So I'm just thinking like, could you like sell those and then buy back your stock, which is cheap? So how do you think about that?
Yeah, well, we don't have to sell them, because if you look at financially, we're very well off. We're pretty close right now, cash and shares, about $30 million. So, and about half of that is cash. So there's no rush to sell it, and the price of Agnico Eagle, the price of Pan American Silver is going up. We have been buying back our stock, and it's called an NCIB. The NCIB ends at the end of the month, and we already have an application in for a new one. Unlike other, we don't have much stock out. We only have 56 million shares out. So it becomes, do we want to go down to 20 million? What's the advantage? I'm not sure that there's an advantage to going down too far. So most companies that do NCIBs, they buy back the stock because they have too much stock out there. They're trading at 5 cents and they've got 200, 300, 400 million shares. We're trading at what, 95 cents? We only have 56 million shares. Should we be trading higher? Damn right we should be trading higher. So what we have the NCIB in order to buy back stock, but in order to provide price protection. So when people do stupid things, for example, like brokers don't always do what's in the best interest of their clients. So if they decide that they're going to whack the stock and throw 100,000 shares at the market and knock it down, we'll move in and buy the stock and stop it from going down, abnormally down. But I don't see a huge advantage in buying 1 million shares, buying 2 million shares. So what? I mean, what's it going to do? Not really very, very much on the company. I think we're better off protecting the price, but also having the money on hand, the cash part, to invest in acquiring new assets, advancing assets, making more money, and letting us ride with certain stocks. And I make mistakes. Some of them I hold too long, but riding with some of our stocks and trying to get the best price possible over time. Right now, I think we're in a run for gold, silver, copper, uranium. Give you an example. We have a company called, we have shares, I think it's 1.6 million shares of a company called Infinico, which are listed in Australia. Their symbol is 188. And they bought a uranium project in Quebec near a town called UN-Beats on the north shore of the St. Lawrence River, where there's a whole bunch of historical drilling and lots of uranium intersections and tonnage, very low grade. So we got a cash payment. I think it was $300,000. We got 1.6 million shares. We have a royalty. I think it's a 3% gross of any production. When we did the deal, the stock was 10 cents Australian. They also have a property in Newfoundland. They're getting very good results on the project in Newfoundland. Last I looked at the stock a couple of days ago, it's 90 cents. So the stock has gone from 10 cents to 90 cents on 1.6 million shares. So sometimes I hold stocks too long, sometimes I don't. We also have trading bans on certain stocks. Like in Canada, if you get stock from a company, the stock is frozen for 4 months. You can't sell it. Other stocks, like the Australian, it's 1 year. So, for example, that Infinico, their stock, I can't sell it until December. So it's just turned out to be very fortuitous for us. The stock is going up. They're doing great work, and they're going to be drilling on or working on our property. They just put out a report up on reanalyzing all the technical data on our property. There's over 300 drill holes, if I remember correctly, and they've outlined 14 target areas that they want to go in and do exploration on. So fingers crossed, they're going to come up with more good results.
Yeah, I mean the buyback is obviously, because of the investors, we don't see what you see out there in the market, like the kind of opportunities. So we just kind of look at your stock. It's cheap. It has low volume. If you just bought more stock, it could go up, which is really what people want at the end of the day. So I guess that's kind of the biggest complaint I've been hearing in the forums and stuff such.
Yeah, well, I mean,
it's not big enough.
Yeah, I mean, our stock suffers from a number of things. Our success is part of our problem. We have 250 assets, including 105 royalties. Most people, when they look at companies, they got 1 or 2 projects. It's easy for them to focus, okay? And they can focus on a particular project. If they get good drill results, the stock is going to go up. If they get bad drill results, the stock goes down. And through the whole perspective, they get diluted depending on success or failure. In our case, it's difficult for people to focus because of the number. It's also difficult for people to focus because the variety of the types of assets, precious metals, base metals, specialty metals, industrial minerals, aggregates. We have things that people have no bloody idea what the hell they are. People didn't know what talc is used for. They don't know what scandium is used for. They don't know what flogophyte is used for, mica, a whole bunch of things that we have that they just, it's too difficult for people to take the time because of the number and because of the variety of assets that we have to really understand it. And I think that's why if they in our presentation, I think it's the third slide, we just have in big letters, focus on the value, because that's what you have to look at, is what is the total value? How many other companies have 250 assets, no debt, $30 million in cash and shares in the company, and only work in democratic, law-abiding countries, Canada, US. We have 1 project in Germany, which is now a royalty. It's a completely different company, super undervalued, but also undervalued, not because the value is not there, it's because it's difficult for people to focus on what we are and what we do and understand what we do.
Yeah. At here, from your fully owned properties, I guess the Talc will be there, but what do you think are the most valuable of your fully owned properties?
Of our fully owned properties?
Well, the ones that you haven't optioned, let's just say that, or maybe even.
Okay, so which one of my children do I love the most? Is that what you're asking me?
I guess I'm asking, like, where do we expect potentially a big deal in the future?
Yeah. Okay. Yeah. Well, right now the market is hot for copper, gold, uranium. So I love our Wood Central Cadillac Ironwood project, which we discussed briefly. Recently, I like our what's called our Rouyn merger gold property, which is farther to the west from that property in Quebec. I like our Ironwood project in Chibougamau, which has the potential for that large. Well, sorry, that's a royalty. Sorry, you want non-royalty. Oh God, there's so many good ones. I like the Scandium project, which is it's remote, but our neighbor. There's only two companies that have this structure that has a deposit of scandium on it. One company has half the structure. We have the other half. I like the potential of that project. I like the Tyrone project up in the James Bay area. We've been working on it. It's gold and base metals. We're surrounded by Azimuth, who have a deal with a Polish company, and we're sitting right in the middle of their project. And we've probably got about 24 different zones of mineralizations and showings. So those are just some of them. I mean, we just have so much. It's really hard to pick and choose. Individual projects. I like our Tavernier project, which is a gold base metal project east of Val d'Or. I like our Right Bar project, which is a former gold producer in Quebec, east of Val d'Or. I like the Eldridge mine, which we just picked up last week. We announced we picked up the Eldridge gold mine near Rouyn-Noranda. I like our, we also in that same deal, we picked up what's called the Porcupine West project, which is over 14 kilometers, the Porcupine Destor Break, which is one of the two main gold localizing gold structures in the Abitibi. Lots of stuff that I love, Yeah.
But the same question, but for your royalties. So what do you think has the most potential out of them? The ones that have the most potential?
Well, probably the biggest dollar value one would be the Ironwood one, which is the iron project near Chibougamau, which Cerrado have. So that's probably the best one, and the possibly going forward. The one that Eldorado have, Emperor have, the Duquesne West, where they've been drilling off because we already have, was it 227,000 ounces cut, 850,000 ounces uncut of gold outlined. We've optioned it to a company called Emperor Metals. They've been working on it. They're in the second year of an option. The zones, there's multiple gold zones which were drilled and explored looking for high grade intersections, and they have a different concept. They have a conceptual model of a large tonnage, low grade deposit. So they've been drilling in the area of the known mineralization, trying to expand the resource from narrower, high-grade economic zones into wider, low-grade economic bulk mineable zones. They're also taking all the old drilling, because we keep all the core, and they're reanalyzing old core that was never analyzed with that in mind. If they're successful, that has a really good potential going forward. That particular project is sitting between two gold mines, so it's a really pretty cool project. But we have a lot of things going forward that have really excellent potential.
Yeah. Next is you have said that you're looking for a successor, and let's say you don't find one. Would you look for a buyer of the company?
We look for anything and everything. We are looking for a successor. We've had a number of interviewing people. We have one person He doesn't even know that he's potentially a successor. I gave him a project, and he's consultant at the moment. And if he succeeds with the project, then I'm going to see about hiring him. But we're open to anything. I mean, if we're approached that somebody wants to acquire Globex and is willing to pay the price, then fine. The problem is that because of our diversity, there are very few companies that can handle a company like Globex. We have royalties, we have base metals, precious metals, and I keep saying the same thing, industrial minerals, specialty metals. Most companies out there are focused on one thing. They're focused on gold, and they wouldn't know what the hell to do with a specialty metal. And we're approached by companies that want to buy individual projects. That's how we do deals. We've had companies approach us wanting to buy particular royalties. But if we're approached by somebody that wants to take on the whole thing, or if somebody wants to take on all the royalties but pay a price that is worthwhile for our shareholders, yeah, sure, we'll do it. But the trouble is getting them to pay the price. Everybody's looking for a cheap deal, the same way as I look for a cheap deal. I don't blame them, but we have to find somebody who's prepared to and able to pay the price.
Yeah. I mean, what if somebody comes in and tries to buy you for 100% premium? What would be
if somebody wants to buy it 100%, hey, listen, we almost did that at one point in 2006. We were very, very close at $7 a share. And then at that point, we had less than half the number of assets we have now, when we only had a couple $1 million. So we're a hell of a lot more attractive now when we're trading at what? 1/7 of the price that people were willing to pay in 2006.
Yeah. I think it would be a steal if somebody comes in, buys the whole thing for $2. So starting to get end of my questions now. I have questions from some other people, and I mean, some of these are kind of, so Mark Kurt asks, does the Fayol royalty have the $2 million cap?
No.
And then we have Simon asks, how do they address the low valuation, and would they switch to a different exchange?
Sorry, how would they
address the low valuation, and would they switch to a different exchange?
Well, how would I address the low valuation?
Yep.
Yeah, I mean, well, we address the low valuation by basically by making more money, getting more assets, and there's a number of ways. We're looking at the question you just asked recently. One of the ways to do that is spin off other companies. We could do a copper company, we could do a gold company, we could do a royal company, or sell the royalties to another royalty company, get shares, distribute those to shareholders. There's a whole bunch of ways to do it. The difficulty is to find willing and able partners that can do the deals. For example, a royalty company that has proper potential. I mean, there's a royalty company that approached us that wanted to take on all our royalties. Well, our yearly revenue is more than double their yearly revenue. So where's the advantage? Yeah, there is a certain advantage if our shareholders get the majority position in the company. But if we don't get the majority position, why do I want to take a position in that company unless it's going to be really build into something really, really strong? So the ways to generate the value, it can be spin-offs, it can be some cases more IR, getting this message out to more people, making the story clearer, changing our focus maybe through, for example, like I said, the spinouts. There's a whole bunch of ways to do it. There's no one path to do it. And the reason that we have that difficulty again are all those positives, the number of assets, the diversity, and so on. Those positives make it difficult to realize the real value of the company. So we are looking at various ways around it. There was no point in a lousy market. The markets are coming back on a number of things. So now may be the time to, if we can find the right partners, to get these things moving forward. We'll see.
You're probably not looking to switch to a different exchange, right?
No, I mean,
question from here.
We're on the Senior Toronto Exchange, which is the senior exchange in Canada. Why would we not want to be there? We're also on the OTCQX International in the United States by invitation. Okay, they called us and asked us to list as the very first mining company on the OTCQX in the US. We also are in 7 exchanges in Germany. In Germany, it works. You don't list yourself. If what's equivalent of brokers like you, they list you. So we're on a lot of exchanges. We're very visible. So I don't see any reason to change exchange. What exchange would we go to that would make a difference? I mean, we're on the most senior exchange in Canada.
Yeah. So Rufus asks about the buyback. I think we talked about the buyback already. So Viking Invasion asks what is going on with the property royalty deal with Toma Gold involving Shibugamu Shibugamu, whatever.
Shibugamu.
Yeah. So what is going on with that?
Actually, Shibugamu Independent Mines was a spin-out company from Globex, which we dividended to our shareholders, which I stupidly did in a very bad market. So I'm very careful now. Anyway, yeah, we're down at the final stages of a deal. We have another conversation on Thursday, and hopefully we'll be able to finalize that deal. Either that or we're going to walk, one or the other. So we've done a lot of negotiation, a lot of up and down. Hopefully it's going to get finalized very shortly.
So same person asks, well, you answered that one. So there's Rufus asks, any chance CBG, I guess Shibonagua and Globex merge?
No. I mean, we spun it out as a dividend to our shareholders. Why would we take it back?
Yeah. There's Anubak asks about the Ironwood. We talked about it. How is the interest of potential option partners for our top tier gold properties, Montalebre, Ramp project, Santa Ana, etc.?
There's there's lots of interest. The problem is finding people who are interested who actually have the money to pay what I want. And that's always the problem. Right now, we're in a particularly bad downturn. A lot of companies are trading at 5 cents or 10 cents or 2 cents, and they don't have money. And if they want to raise money, they're going to dilute themselves hugely to pay us. So it becomes a catch-22. You know, they're going to dilute themselves in order to pay us, and they're going to give us shares, and the shares as well as cash and so on. But the shares that they're going to giving us are diluted shares because there's going to be more people who will be dumping shares into the market. So we have to do deals with well-organized, strong companies in, at the moment, is a really crappy market. So not easy.
Yeah. So is there an interest from royalty companies in buying a large block of your royalties?
We've had a number. Well, we had one royalty company who wanted to take everything, but we did not come to a deal. We weren't particularly in love. And we've had other companies that have approached us to buy one or two at a time. Again, the prices were not sensible. For example, the last one wanted to buy was one of the two things they wanted to buy was the Fayol royalty. They probably heard that it was going to be going to production, so they thought they'd step in and I'd be stupid enough to give it to them for a small amount. Well, I didn't. So yeah, we get approached every once in a while. If the price is right, we'll do a deal. So far, we've done a deal we did a deal with a company called Electric Royalties. We sold a number of assets, manganese royalty, vanadium royalties, a couple lithium royalties, and we're now what is 11% shareholder in the company. So we'll see where that goes.
Right, the next one. Well, this is about Sibupuen, so I'll skip that out. I don't want to hear about that anymore. So, what about this person says? In the last interview, Jack described the silica project as virtually a no-brainer. Why don't we dismantle it ourselves?
We actually are currently working on that project. We have a half a dozen silica projects. We have one in Ontario called WYSE, W-Y-S-E, and we've done the mapping, we've done channel sampling. We have two different laboratories doing metallurgical work for purification of the material to find out how pure the silica can be, because the price of silica is based upon the purity. You want to have 99.9999, whatever, as pure as possible. And the more nines you have after the decimal point, the higher the price and the value of the material. So we have done test work on making what's called Caesar stone. I don't know if you're familiar with it, but the material used to make countertops. For example, if your kitchen, they make molded countertops. What that is basically crushed silica, pure silica, and then cemented together to make whatever color you want, whatever shape you want, and so on. A company that makes Caesar stone is already, or Caesar stone type material, has done the test work, and they love our material. So we're doing more purification tests on it. That's potentially a use, but there's all kinds of other uses. For example, which is going to be a weird use, you go to, I don't know if you play golf, but the sand pits on golf courses have a very particular kind of sand. The particles have a certain purity and a certain color and a certain shape. In Eastern Canada, all that material comes from the United States. So it's paid for in US dollars, and it's transported by rail or by truck. If we can produce it in Ontario, we have a homegrown market, which is a fair bit of volume for that material and very good pricing. Even our lowest grade material, just like coarse material, with the mica left in it, it can be used to, is sold, that type of material is sold in hardware stores as decorative rock in gardening, for example. So there's lots of different uses, and we're working on all of them at the moment. We've done crush tests also, so we're carrying it forward. The thing, keep in mind, when you're trying to carry a project forward, it takes time. It takes money. You have to manage your money, and you have to manage your time, and you have to have the right people carry the thing forward. We're very conservative. We're not interested in making a flash and then disappearing because the project doesn't work. We'll work on the things as we progress and make positive advancements. We'll make that information available. And we're trying to get on production in that.
Yeah. Next one is from Alf Munich. Are there near-time ideas for the acquired projects in Nevada and Arizona?
We've actually acquired 5 projects recently in Arizona and Nevada. We've acquired gold and silver, we've acquired fluorspar, we've acquired rare earths, and we're looking at other acquisitions in Arizona and Nevada. So right now we have projects in Arizona, Nevada, and Washington State. In the US, we have the project in which is now a royalty in Saxony, Germany, and we're working on acquiring a project, the gold project in Portugal at the moment.
Okay. From Homo Ek. Why are there hardly any new deals currently?
Really simple, because a lot of people don't have money and their stock is worthless. So we're not interested in doing fire sale deals, and we're not interested in taking stock which is going to end up being useless. Sorry. So it's there are markets where you can do deals, and there's markets, the lousy markets, where you can do acquisitions. We take advantage of the lousy markets like now to acquire things. We take advantage of the good markets to do deals. So it's an ebb and a flow. It's not a steady line.
All right. Well, I think that was everything I have. So thank you for agreeing to the interview.
My pleasure.
And, yeah, gonna end the recording here.